We're joined by Michael Barnello, newly installed CEO of LaSalle Hotel Properties. Michael, thank you for joining us.
Thanks, Alan.
What would you say has been the greatest lesson that you've learned this year?
Well, starting from last year and all through this year, I think we've learned a powerful lesson about leverage. We've learned that while it can help you significantly on the upside, it can be a devastating worry on the downside.
And speaking of leverage, how do you view your company's balance sheet at the current?
Well, we feel like we're in great shape right now, and the reason is that in the second quarter we were able to do a couple of equity raises. We were able to net about $260 million. And so with that, we were able to significantly pay down our debt, and we took ourselves to a position of a debt to EBITDA leverage about 3.8 times, which is really best in class. So from a moving forward basis, we're feeling very good about the state of our balance sheet. Of course, that depends on what happens in the next couple of years in terms of the operating performance of the hotels, but for the moment, we feel very good.
And sector-wise, what kind of challenges do you see going forward in the next year?
The challenge that we're faced with in the hotel business is that we've lost so much in terms of demand, in terms of occupancy in 2009, that we need to get it back. And the combination problem is that the supply has increased significantly in 2009. So when we're looking at 2010, the industry is starting from a perspective of being at the lowest occupancy level really in the trackable history of the hotel business. So from that perspective, we have to work our way out of really what are gutter occupancy levels to get back to a better situation where we can actually get pricing power.
And as a public company, what kind of role do you think that REITs are going to play in the overall commercial real estate market going forward?
We think REITs play an incredibly important part in real estate overall for a number of reasons. One, we offer diversity, but at the same time, we're generally lower leverage vehicles. And the one thing we just talked about, we learned through this downturn is that leverage can be incredibly powerful on the ups and the downs and can be devastating on the downs. And so when we look forward, REITs generally are lower leverage. We think that our cost of capital now and in the future will be competitive or better than other forms of capital. And so we are positioned both from an internal growth perspective as well as an external growth perspective as a pretty good play. So we think REITs will continue to be a solid performer in the future.
Okay, well, thank you very much for your time, Michael.
Thanks. Thanks, Alan.
For more information on this and other REIT news and analysis, check out REIT.com.